Okay, well, good morning, everyone. Welcome to the Foreign Correspondents Club of Japan. I'm Anthony Rowley, a director and past president of the club, and I'll be acting as moderator for today's event, which is the latest in our series of what we call our deep dive events, in which we ask panels of experts to look at topics of current interest. And today we're focusing on aspects of the Japanese economy, which I think certainly is of current interest. So let me straight away introduce our two expert panelists. On my right is Dr. Richard Katz, who's a senior fellow at the Carnegie Council for Ethics in International Affairs. His new book, The Contest for Japan's Economic Future, Entrepreneurs versus Corporate Giants, is on the need to revive Japan's economy through restoration of entrepreneurship. And on my left is Jesper Koll, who's a global ambassador and expert director of the Monex Group, Japan, Catalyst Fund. He's also an ambassador for FinCity Tokyo, which is as you know, I'm sure, a government and private sector organization which supports Japan's efforts to develop a cutting-edge financial sector. Okay, well, the reason why we've chosen this topic today is, the Japanese economy has become a subject of, I think it's fair to say, intense international interest lately, not least because it appears poised to make a dynamic comeback from decades of deflation and stagnation after the collapse of the 1980s bubble economy. And I think one manifestation of this was Tokyo stock prices recently hit a 33-year high, and the market has become the darling of international investors. I think to hear many in the financial profession tell it, Japan has become a land of opportunity, of innovation and entrepreneurship. In other words, the place to be, while China may be destined to suffer some of the economic problems that created a lost decades for Japan in the past. But not everybody sees it that way. Some people point to falling productivity in Japan. What they say is low share of entrepreneurs and weaknesses in the small business and startup sectors, not to mention a declining population, of course. And only last week, the IMF forecast that Japan's GDP growth will fall to just 1% this year, from 1.9% in 2023. And it seems that Japan is destined to slip to fourth position behind Germany and, of course, America and China as currently the world's third biggest economy. It seems to be destined to become number 4 in terms of GDP value. So, which of these two pictures is the true one, or does the truth lie somewhere between the two? So we've got speakers today from both sides of the house, which should make for an interesting discussion and Q&A session. So I'll invite Richard, Dr. Katz, to lead off, please, if you would. Thank you.
Thank you very much. All right, let me hit the share. Okay. Hopefully this is the slideshow. We'll see. If it works or not. Okay. This is the fourth time since the bubble popped in 1990 that we've been told Japan is back. And it's always sparked by a little upsurge in stock prices and lots of promises of reform. So it was with Hashimoto in the 90s, and then Koizumi, and then Abe, and now it is Kishida's turn. And people say, gee, if the stock market goes up, that means something very nice is happening with the economy. And that is just not so. Now, this is not, okay, I'm sorry. The slideshow is not on.
It's a very nice cover, though.
Isn't it a nice cover? So just use this one. Okay, here we go. So this, I hear, it's a very good book, but we're going to move on from there. So if you look over here, the stock market at the dark black line, that's doing great. But Japan's GDP is no higher today than it was 6 years ago. It's not recovered from the second consumption tax hike under Abe. And the dotted line is real compensation per employee. That's actually a few percentage points below where it was 6 years ago. So this is a stock market phenomenon. This is not either a reflection of an economic recovery, nor is it a predictor of one. If you look at corporate profits, what you can see is, again, the corporate profits are way up. They've more than doubled, right, from where they were at the 100 line, back in the mid 1990s. However, compared to 1996 is the level in the dark horizontal black line. What you can see is that sales per worker, per employee, are only up a small amount from 1996, right, 30 years ago. And wages per worker are not up at all. So companies are making profits by suppressing wages, and that is a problem. We are told that corporate governance reforms are making companies more lean and mean and efficient, but in fact, the return on assets, that is the profits that companies make for all their assets and plant and equipment and financial assets, all kinds of things, are certainly way below where they were back in the 70s and 80s, but they're no higher than they were in the mid 90s. So the notion that corporate governance reforms have improved corporate efficiency is not true. In my view, competition is far more important than corporate governance reforms in having corporations perform well. Now, if you look at Japan productivity, wait a minute, there was supposed to be, let me make sure that, oh boy, this is the wrong slideshow. All right, well, I'm going to talk then without slides. Here we go. So, so this is an economy that has not performed well, is still not performing well, and it needs reform. If Japan were back, it would not need reform. Now, it really needs reform in two areas. One is supply and one is demand. I'm an economist, and our bylaws require me to say supply and demand a few times in any talk. If workers are facing wage suppression, who's going to buy the products of the companies, right? So what you have is economists long ago figured out that in order for an economy to be stable, the wages per hour, real wages per hour, have to grow over the long term more or less at the same rate as GDP output per hour. And that is not happening in Japan. Japan has the biggest gap between the growth in output per hour and wages, which means workers cannot afford to buy what they make. So somebody else is going to have to do it. And who's that somebody else? Well, it's the government running huge deficits for year after year after year after year after decade after decade after decade, right? The MOF declared a budget crisis, an emergency, back in 1978 for the first time, right? So the budget deficit is not a cause of Japan's problems, it's a reflection of their problems. So what else you do? You keep interest rates at zero for 30 years in the attempt to boost the economy, which has kept a floor underneath it, but it's not really boosted. Or you drive your yen, your currency, to bottom basement levels in the effort to have the foreigners buy your products. So that the textbook analysis, which is if you have wage suppression, you're going to have macroeconomic stability. That's come true in Japan. And the other issue then is supply, which is even if demand were fine, how fast can Japan grow? Well, growth is a reflection of how many people are working for how many hours and the growth in output per hour. The hours, despite more old people working and women working part-time, the number of hours that people work in Japan has fallen by about 10% compared to 1990. So the only source of growth in Japan is productivity growth. But what we see here is that whereas Japan was earlier catching up, let's see if this works. Here we go. This is from 1970. If I went back to 1950, it would be right down here. But in the mid 90s, it peaked. And now Japan's productivity, that is output per hour, compared to the US is at 100% the top line. It's fallen back to only 59%. The EU is here, it's more or less flat. It's keeping up. So this is a moving target. So Japan is not doing well either on the supply side or the demand side. So if Japan is to do well, we need a productivity revolution in Japan. Where's it going to come from? The government theory is that corporate governance reforms are going to cause the big listed companies to do really, really well. And while reform of the big companies is certainly necessary, it's woefully insufficient to have recovery. For one thing, the listed companies employ far less than 10% of the workforce. So, and what do you do about the other 90%? But the other thing is the corporate giants suffer from the old company disease, which is a disease in every country, which is that companies that are old, decades and decades and decades old, become very set in their ways. And they find it hard to change when the times change, particularly if they don't face enough competition. The only reason that Ford and VW are doing electric cars is because of Tesla. In Japan, it's even worse because with a promotion from within, let's say you're Sony and you're losing $1 billion per year on TVs, but you're an executive and your senpai was really part of the TV project. If you abandon TVs, you betrayed him. So, and just the mindset, right? So you look at electronics industry, which had been a spectacular industry for Japan. They're stuck in the analog era. Sony tried and failed to produce a competitive PC or tablet or e-reader, failed. And between 2008 and 2020, at a time when you had a boom in global electronics sales, the sales of the top 10 electronics hardware companies, every single one of them actually dropped, whether they were producing in Japan or producing overseas. So what produces productivity? An awful lot of productivity growth comes from the entry of new companies with fresh ideas and the exit of older companies that just can't keep up with the times. Countries which have a more rapid turnover of new companies replacing old companies grow faster. Within a country, the industries that have this rapid turnover and adopt new technology grows faster. So in the 80s and 90s, 60%, this is an amazing number to me, 60% of the US manufacturing growth came from companies that were under 5 years old. So what you need is a balance in the economy between the incumbents, whether they're the big giant companies or the small mom and pop shops. You need a balance between them and then the new companies entering. And Japan does not have that balance. So what it needs is an entrepreneurial effervescence like it had in the economic miracle days in the post-war period, or like it had in Meiji. There's nothing in Japanese culture which prevents Japan from being entrepreneurial. It's policies and practices that shore up incumbents. Now, to be very clear, what I mean by entrepreneurs, people think I mean Silicon Valley, those high-tech firms funded by venture capital. They're a small sliver of entrepreneurship. What are called gazelles, it's nicknamed after the African antelope. It's one of the fastest and most agile animals on earth. There are high growth, small and medium companies and young companies. There's 50,000 of them in the United States. There's about 20,000 in Italy and 10 to 20,000 in Korea and Germany and France. We don't know the number in Japan because the Japanese government does not even measure that. So we look here as out of the total growth and productivity in a typical rich country, 40% of the entire growth and productivity comes from the entry of new companies with a fresh idea and the exit of the old companies. In Japan, it's only 16%. And that is why overall productivity growth in Japan is really lagging. Japan has the lowest share of the male labor force, create companies that have non-family employees. The average is about 6%. In Japan, it's 2.5%. Moreover, those companies in Japan don't grow. There are obstacles to growth. So you have Japan on the extreme right, and then the US on the extreme left. They're both outliers, but here's all the countries in the middle. Now, here's the good news. The good news is that there were 3 really big obstacles to entrepreneurship, not counting the politics of the government. 2 of the 3 we're making tremendous progress on, and 1 remains, all right? One of them is it was so hard for a new company to hire people that they needed because of the lifetime employment system. Right? It was very hard to hire veterans with certain skills you need. Well, that's changed. That is really, really changing a lot among the best and the brightest of the companies. They are quite happy and willing. They know their value. They will flock to these new startup companies and help them, including not only young people, but people in their 40s whose kids are out of school and they say, this is my last chance to do something interesting in my career. Women who can't get promoted at the traditional companies flock to them. One of Japan's newest billionaire, now he's the second newest. He became a billionaire by basically matching companies that need talented people with talented people who want to get a better job, better opportunity. As of last year, 2.3 million people had switched jobs. And these are people with 6 million yen or above in salary to 20,000 companies. And that's just one company that's doing this headhunting. There are many, many of them. Firms are having to engage in mid-career hiring. So that's one thing that is really much, much better. The other thing is technology. People can underestimate the ability of technology to change the balance of power in society. And this is occurring and also give new companies access to customers. Whoa, that's not right. So in the analog era, innovation was led by the giant companies. Most R&D was done by companies with at least 25,000 employees. Now in the digital era, a lot of more and more of the R&D is done by companies with fewer than 1,000 staffers, even fewer than 500 or 100. And they collaborate with each other. In a typical patent in ICT, in information and communications technology, 219 different companies across borders collaborated to create these products. Japan's big companies are stuck in the analog past. Do everything in-house, do it ourselves. They have not adopted the modern software in a measure of skill and digital agility. That is not how much you invest in digital technology, but how much benefit you get in sales and in profits. Japan, out of 64 countries, Japan came in 64th. So and the government doesn't help because 90% of the R&D aid, financial aid, goes to the big companies. And as a result, only a small share of the R&D in Japan is done by these SMEs. All right, so here's what happens now. Toyota knows that electronics and digital technology is the key to cars, but they can't do it in-house. So they now have more independent software vendors, both Japanese and foreign, as first-tier suppliers than parts makers. And these people want to remain independent. They won't join the Toyota Keiretsu. They insist upon being treated as partners, not as subordinates. Right? And they want to work for anybody or collaborate with anybody, including Toyota's competitors. And Toyota has to accept it because they can't do it in-house. And therefore, Toyota sort of now is conflicted. Does it want more entrepreneurs because it needs them? Or does it want fewer because it doesn't want challengers? And this kind of conflict is growing among companies and within different parts of companies. And that opens up politics. And then on the e-commerce side, used to be, again, a new company could not access customers because they couldn't even, distribution system was a gatekeeper. They couldn't even access them. Now you've got e-commerce. So in Rakuten alone, last year, 57,000 different SMEs had sales of almost 6 trillion yen. And companies have grown 10-fold, 20-fold because of this access. So this is changing the power balance between the big companies and the small companies. Now, well, how much time do I have?
Well, another 5 minutes.
5 minutes, okay. The big blockage is finance. That's the remaining big blockage, which is if you got brains and money, great, you can start a company. But you got lots of brains and no money, you're not going to be able to start a company. Or if you do, it will be too small and you will invest less, hire fewer talented people. You will die prematurely. If you do survive, you won't really thrive. But the financial system is stuck in relying so much on collateral and the personal guarantee where you borrow for your business, and if the business fails, which most do, you owe the bank your house, your car, your life savings, and your firstborn child. So it's not a place you can go, which means who gets to be an entrepreneur? The people with brains and money. And that's why it's only 2.5% of the labor force compared to 6% in other countries. So the financial system is the big blockage. Now, all of these problems could be solved very, very easily, and because of time, I'm not going to go into the various solutions. But the fact is, Japan does not have to become America or Sweden or France or whatever. Changes could be easily made, and yet the LDP administration refuses to make them. If people want to talk about what are some details there, but for all of Kishida's talk, he said the right things. It's not a new form of capitalism, by the way. But he said we got to redistribute income, and he was right to have consumer purchasing power, and we need 100,000 new startups by 2027, and I will boldly move. Every time a prime minister says, I will boldly move, you know nothing is going to happen. And so there was a superb report presented by a panel of experts convened by the Science and Technology Council of the Cabinet Office. Terrific report, virtually ignored by Kishida. So people know what to do. The solutions are not that complicated. It's not rocket science. It is not, far less disruptive. But the system is made to protect the incumbents, both the giants and the small and medium kind of zombie companies. And that's the political problem. But these changes I'm talking about, the societal and the technological changes underneath the surface, more than people are aware of, are changing the balance of power, changing the politics, where now new companies have enough clout to talk to officials and to talk to Diet members. So I believe that this today is Japan's greatest opportunity in a generation to really have an entrepreneurial revival. When people claimed a decade or 15 years ago it was here, it was premature, it was wrong, but now they have a real opportunity. It's an uphill climb, there's certainly no guarantee, but the opportunity is there. You talk to these new entrepreneurs, it's a thrilling experience, their ambition and their spirit and their elan. And it would really be a shame if Japan missed this opportunity. So let me stop there and hand it over.
Okay, thank you. Thank you, Richard. I don't know whether to describe that as an incisive analysis or a brutal indictment, but whichever. I'm sure.
Is it easier to switch chairs?
Maybe easier to switch chairs.
Okay.
Yeah.
Do you want to switch? All right, go ahead.
So now I'm on the left.
I apologize for this. It's partly my fault. I was informed by Jesper this morning that he'd sent slides, and I neglected to pass that information on, so hence the switching of seats. For which I apologize. Okay, tell me when you're ready.
All right.
Okay, well, as I was saying, so now, Jesper, I'm sure you're anxious to spring into action in defense of the Japanese economy.
Richard, I was actually surprised because, you know, you're far more optimistic than your reputation makes it out, in the sense that, you know, I mean, you know, obviously all the data that you show about the past is the past, and we all know what the past was like. And, you know, actually end on a very, very dynamic note. And I certainly think that the contest between, as it were, the dinosaurs, right, the establishment, the incumbents, versus new entrepreneurs, you know, coming in and being challengers, that's obviously, you know, that's exactly where dynamism starts to come from. So let me sort of run you through a couple of slides that I sort of, you know, tell at the moment, you know, to this great question, where what's different? Let's try and figure out, okay, where are some of the dynamics that are coming through? And one thing I liked about Richard's thing is that in the past, it's very, very right. It was always some knight in shining armor, Mr. Hashimoto, Mr. Koizumi, Mr. Abe, you know, who tried to, you know, sort of be the catalyst for change. And the good news is that this time it absolutely is not. Because, you know, Mr. Kishida is this, that, or the other, but predominantly he doesn't do anything, right? Which is very, very good. But what is doing something is the reality that Japan's private sector, by which I mean the people, as well as corporations, are actually changing much, much faster and much, much more aggressively than people make it out to be. First slide here, you know, what has changed elite on the move. If you look at the top bureaucrats in Japan, as you know, they joined the Ministry of Finance, they joined METI in their early 20s. And in the past, nobody left. Now you see that, a lot of these young men and women actually leave. And no, they do not go to Mitsubishi Corporation. They do not go to JP Morgan. 2/3 of them actually go to startups. So you do actually see, that the young generation is ambitious, is prepared to take risk, and, is actually making things happen. It's very, very important. Everything starts and ends with human capital. Now, as far as the dinosaurs are concerned, if you look at the last 18 months of the listed companies, the announcements for new CEOs, wow, this is a huge generational change. I mean, President Biden and Mr. Trump, anyway, you get with the point, right? By the way, the average age of an elected Japanese politician is now 56, as opposed to 67 in the United States of America. So this generational change, is actually happening. And as a result of that, the legacy that Richard addressed, which is very, very real, is actually being cast aside, because these young men and women who are taking over, do actually play offense. They don't play defense. And we get to that when you look at the actual data. Last year, you had a record amount in the history of Japan of business investment spending here in Japan. And no, it wasn't just TSMC building a factory here. It was across all sectors and all industries that you see new investment, adding capacity, as well as investing for greater productivity here. So the generational change is very, very important. And then last not but least, what has changed is that, there is this consensus that policy must not change. In the past, whenever there was an inkling of an upcycle, right, you had, the Ministry of Finance, talking about increasing taxes and the need for fiscal reconstruction. This is not happening. In fact, I fell off my chair last year when Prime Minister Kishida announced, that we are going to have a tax cut this year, right? We're getting a tax cut of 1% of disposable income. So it's quite interesting that the consensus has changed in the sense that, yes, the macroeconomic parameters in the sense of monetary policy and fiscal policy are focused on supporting economic growth literally at all costs, right? Which is quite interesting, right? So second point, and this is very, very important. Richard focuses very much on productivity numbers, which is fine. I'm a bit more selfish and, just focus on listed companies, because that ultimately is the investable universe. You and my pension system is going to be created, if the returns on listed companies are positive rather than the economy overall. So let's have a look here. And you see that actually Japanese CEOs do deserve the Nobel Prize for Applied Economics, because for the last decade, sales have been flat, but profits have gone up 11 times. Now, anybody who's ever run a company, you can manage profit growth with flat or negative sales growth for a couple of quarters. Doing this for one generation is absolutely spectacular, right? You also see that in comparison, in the US, you had sales going up 3 times, you had profits going up 6 times, not bad, right? But still, I position that actually the salaryman CEO, that the actual governance and management of Japanese corporations is spectacular. You can look at this company by company, case by case. The operational efficiency that corporate Japan has, is absolutely spectacular. You see, this is not just my work here. There is a Boston-based deep value fund called GMO. They've done the numbers here. If you look at actual for listed companies, if you actually look at the true economic capital growth, so if you strip out the valuation improvement, I mean, in simple terms, the price earnings multiple, right, in the United States used to be 14, 15 times. Now it's basically steadily between 20 and 25 times, right? So America is very good at selling stuff and creating a hype and thereby boosting the valuations of the share prices, but in terms of the actual economic value creation, actual profitability at the core, you know, corporate Japan is actually the best in the world, even compared to my home country, Europe. But anyway, I don't know. Europe's not a country, right? Germany would be negative on there, at least at the moment. But you get the point. You know, there's far more depth to the operational efficiency of corporate Japan. And, you know, you don't have to be Warren Buffett, you know, who came to Japan, you know, 2 years, is here basically once a quarter now, you know, to be completely amazed by the ability of, you know, the establishment companies to actually be very good. So it's kind of the story of my life. I showed up here about 38 years ago, and you see that the price earnings multiple, you know, went down, collapsed, and hasn't been able to be boosted, while EPS, earnings per share, or profitability, you know, has actually gone up tremendously, right? So there's much, much more in terms of substance, you know, that corporate Japan has actually managed over the last 30 years than what we see here. Now, the big difference to the United States in particular, right, is the fact that Japan doesn't have any superstars. Richard pointed out, you know, asset efficiency. He used return on asset. This is return on equity. Be my guest. It looks very similar, right? You see that, you know, Japan is this dull bell curve distribution around the mean of around 8 to 9% on the return on equity. Nice, right? But you see that America, outside a couple of superstars, right? Let's call them, what's the latest thing? It used to be Guffram, then Guffman, and now it's what, Magnificent Seven, right? It's like America has superstars. You know, Sho Otani plays in the United States. He doesn't play in Japan because that's where the superstars are playing, right? But, you know, don't make the mistake of, you know, looking at the United States as a superstar performer, while in Japan, actually, the distribution is actually much, much higher. Now, the question is, why are there no superstars in Japan? And the primary reason is the industrial structure, that indeed, you know, there simply is too many companies. I mean, Japan still has 4 companies that make motorcycles. I mean, you know, do we really need 4 companies that make motorcycles? And by the way, they're not pure motorcycle makers. They make them as part and parcel of something else, like Honda, Suzuki. I think, you know, Kawasaki also makes lawnmowers and things like that, right? So you see, you know, the market capitalization, or GDP, you know, the gap between Japan and the United States, the US is basically about 4.5 times bigger in GDP terms than Japan. The market capitalization is about 7 times. But the number of companies who compete in the market is basically the same thing, right? And that's very, very important. You know, you can actually statistically show that if you build a different model, the big difference in productivity between Japan and the United States of America is the fact that there is no exit of corporations. Nobody goes bankrupt here. And as a result of that, you know, you've got marginal players, zombie companies in the market, taking away price, absorbing resources, and that's the single biggest problem. And that's why, to me, right now, I'm actually super excited. Because, I mean, look, this is not the economics you get taught in Chicago or anywhere else, right? This is bankruptcy since the 1960s. So during the high growth area of the 1960s, bankruptcies rose, right? Then during the bubble, bankruptcies fell. After the collapse of the bubble economy, initially bankruptcies went up, but then our friends in the LDP issued a moratorium. Basically, they said no bankrupt companies. And as a result of that, you find today that 12% or about 12% of all companies are incapable of paying interest expense out of their profits. Given that interest rates are basically zero, that's actually pretty difficult to achieve, right? So it's quite interesting, you know, that you've got this. And the interesting thing is that over the last 15 months, we're actually starting to see an increase in bankruptcies. And why is that? The reason is that we now have inflation. We do have the labor shortage intensifying dramatically. And so if you as a CEO, or if you run a company that does not have an investment strategy, that does not have a story on how to incentivize or how to attract, younger people that are ambitious, now you start to go out of business, which is very, very interesting. And I think the key issue right now is exactly this creative destruction, that we do actually see more bankruptcies. By the way, you see it in the stock market as well. And as you know, my prediction is that this year we're going to have more MBOs, more management buyouts than IPOs, because the changes in corporate governance, which make it for the inefficiently listed companies, right, makes it more complicated. Now you have to justify what it is that you're doing, right? Now you have to have these embarrassing conversations with activist investors. No, I'd rather go private. Doesn't make the economy better, but it creates in the listed market huge opportunities that you actually have. Couple of other points very quickly. You've got, if you look at how corporate Japan distributes its spoils, right? If you look at, this is the Hojinki Gyotoku, this is the all companies in Japan, right? And you see the blue line, which is sales, right? And you see that basically grew very nicely, throughout the 60s, 70s, and 80s, but then more or less stagnated, as we've shown before. You see that employee compensation, during the bubble briefly was above sales growth, right? But then since then basically has also, flatlined in line with sales. Now, the interesting thing is two things, right? One is that shareholder returns, right? So if you look at dividends and share buybacks, actually, since the start of Abenomics, have actually outperformed, right? Which is quite interesting, right? It's not like, as an investor, there is a very high dividend stream. Share buybacks keep on running every year at record levels, right? So the return to shareholders is actually very, very strong. The problem is retained earnings, right? The fact that corporate Japan now has about 115, 120% of GDP equivalent of cash or cash equivalents sitting on the balance sheet, right? Now, you need a liquidity buffer, but that liquidity buffer in the US, for example, is about 40% of GDP. I mean, Apple has a lot of cash on its balance sheet, right? But do you need 1.3 times GDP? The answer probably is no. So these underperformance in some of the metrics that Richard uses, ROA in particular, right, or even ROE, right, is the reason that you've got very lazy balance sheets, right? And using these lazy balance sheets, right, in a more proactive measure is exactly what is happening now. And that's where not Prime Minister Kishida, but something unbelievable has happened. You've got the Tokyo Stock Exchange, the Japan Exchange Group, as it's called, right? Now holding companies accountable if your price to book value, right? So if the value of your balance sheet is less than the value reflected in the stock market, right? Your price to book is below 1, you are going to be shamed. What are you doing being a listed company? Which in economic history has never happened before. Because, if I'm a stock market, you're my customer as a listed company. I collect all sorts of fee from you. Now the stock market as a private company has actually turned around to become an activist investor. And that's huge. And again, why is the stock market going up? It doesn't take much calculation skills to figure out that, well, today, there's still 40%, give or take, of companies who trade below book value. If all of them trade at book value, the Nikkei goes to somewhere between 45 and 48,000. I mean, be my guest. These are simple calculations, right? So it's thing. But again, the point being that the catalyst for change is the private sector, right? That's very, very important. And the macroeconomic policy parameters actually very much stay out of the way. Very quickly, couple of the 4 megatrends, that's very German. You say that in German, that works very well, the real megatrends in Japan. And I'm not going to talk about AI because AI is a megatrend, or may very well be, but it affects everybody, whether you're an Indonesian company, whether you're an American company, whether you're Japanese. There's nothing intrinsic to Japan, right? And this is where this time is very, very important. The first megatrend is corporate succession. Japan has about 3.6 million incorporated enterprises, of which 2.5 million now the majority owner, the majority owner and president is over 70 years old. So what happens now? These guys die. These guys worry about their succession because their sons or daughters are not taking over, right? And so, now mergers and acquisitions, as well as bankruptcies, are actually happening precisely because of the demographics. So the zombie problem, right, that Japan has, which is the single most significant, obstacle, to overall prosperity, right, is actually being solved by this corporate succession. The second point is that Japan is the richest baby boom generations on earth. You can look at any of the wealth surveys that you want. The sad news is that, yes, 2/3 of all the wealth is held by people who are over the age of 70, which means that over the next decade, you effectively have the equivalent of about 1.3 times GDP unstuck because of death. Sorry, this is why people don't like economists. Richard said you have to talk about demand and supply. You also have to talk about death and demographics, right? But it's quite interesting. Of course, the Ministry of Finance will take its share of this. The effective inheritance tax rate is about 25%, right, for the average person. But this transfer of wealth is very, very significant and obviously is a big boost to the purchasing power of the people. Third mega trend is we're all too cheap. We're all underpaid, right? I mean, a Japanese, executive director now comes at a steep discount. You can hire a software engineer in Japan today, a Keio University software engineering graduate, for 1/3 of the price of what they go for in Silicon Valley or in Israel. And they're even at a 35% discount to the software engineers in Hanoi. So it's spectacular. And don't tell me they're not any good. They're just as good as any software engineers are. Software engineers are not meant to be creative. They're meant to be told what to do and execute. Oh, that's what AI does. Oh, sorry, I forgot, right? No, but you get the point, right? The factors of production in Japan are actually very, very cheap, which gets to the next point. When I showed up in 1985, there were about 500,000 non-Japanese living here in Japan. Today, it's 3.2 million. Of these 3.2 million, 2.1 million actually work, right? It's quite interesting. And if you look at immigration here, on a base of 3.2 million, last year, you got 320,000 of net immigrants actually coming through. I will tell you an anecdote, my favorite story, and which is why I love being a Japan optimist, right? Last year, 7 & I, right? It's your favorite convenience store? Or you're a Lawson kind of guy, right? No, you're a natural. Oh, whoa. Really? Yes. My onigiri don't come wrapped in plastic. No, but in all seriousness, 7 & I last year in April sold its first franchise to non-Japanese. It's a young woman from Nepal who arrived in Japan 11 years ago on a Mombusho scholarship. She started working part-time. I'm sure 10 years ago, that was new. I'm sure she got hugely discriminated against because that was still very new at the time. Now, she's the first non-Japanese to buy the franchise here. Very interesting. So I go to 7 & I and say, hey, tell me about this program. So, yeah, we've got this program. By the way, Mr. Koll, we figured it out. Today, 13% of our employees are non-Japanese. But given that our primary cohort is university students, right? Given the way the demographics works, by 2030, which is around the corner, right? That's when Germany wins the World Cup, right? In 2030, right? It will have to be 50%, 50, completely rational, right? And so we've created this program that's called Gateway Japan, where we, if you're a non-Japanese and you work at a 7 & I, they will give you not just language training, they've tied up with Tanki Daigaku, with various, what are they called, trade schools. You can learn about tax accounting, you can learn about business etiquette, you can learn about all these things, right? And after 4 or 5 years working there part-time, they will give you a loan to buy the franchise. It's like, yes, this is happening. So mark my word, right? In terms of the working population, 15 to 65, right? Today, you've got about 5% of, people who are non-Japanese working. By 2030, this will be over 10%. This is the immigrant superpower, of Asia Pacific. The final big change that is happening, right, is that, and this is to Richard's point, you do actually have change at the dinosaur level, right? My favorite example is NTT, which for all intents and purposes is a dinosaur, one of Japan's most unionized companies. They've got a new CEO, and since April last year, they've introduced pay for performance rather than seniority-based pay. This changes everything, because if you've got pay for performance, right, all of a sudden the labor market liquidity starts to happen. All of a sudden, it becomes very easy for a woman to re-enter the workforce, right? After, having given birth, all of a sudden, it becomes very easy for a non-Japanese to actually participate and actually have a career rather than just a couple of years in a Japanese corporation. So you see that the changes are very clear. Japan is ambitious. Japan is a bastion of stability. Interesting statistics, right? I don't like Mr. Kishida, but that is irrelevant. 100% of all the bills presented in Parliament got passed. In America, the latest count is that you've had, 65 hearings and not a single bill passed? I mean, who is dysfunctional here, right? Anyway, and Japan is very confident. Why is Japan very confident? This is the final point, because Japan is the model of capitalism that works. It's not about GDP. It's not about the stock market. These things are nice. If you're a leader, right, you have a whole bunch of more complex issues that you need to optimize for. And I'm sorry, Japan is number one. If you look at the sources of social problem, right, whether it's homicides, whether it's imprisonment, whether it's trust, obesity, you name it, Japan is exactly where you want to be. By the way, I once showed this chart to some people at the Trump White House, and they went, "Yes, go America, top right-hand corner." Anyway. Never mind. Of course, the real point is, and I'm sorry, I always have to make this joke, but the real point is, of course, that Germany is better than France, which is also very, very important. But look, I mean, let's just be very clear that the American model of capitalism, or dare I say, the Anglo-American model of capitalism, where the entire focus is on capital efficiency and on GDP maximization through cheap labor, right? I mean, it's just a little bit passé, in the world that we're actually dealing with. Another thing is that Japan is a meritocracy that functions. If you look at a thing that economists call intergenerational earnings elasticity, what that means is, do you have to come from rich parents to be economically successful? And I'm sorry, again, Japan is exactly in the spot that you want to be, right? If you're born, as it were, on the wrong side of the track here, you're set of opportunity because of an excellent public education system. Japan consistently scores in the top 1, 2, or 3 of the OECD mathematics and science aptitude tests. Yes, they don't know how to speak up and express themselves. That's very fine. That's what Japanese don't do. But in terms of the STEM literacy, you cannot find a better country than Japan for the overall thing. And then, of course, finally, if you look at the distribution of wealth, right? Yes, Japan has very rich people. There's no question about that. But the distribution of wealth, right? The top 1% here own about 20% of all the assets, right? In the US, it's about 34%. And quite interesting that in the great model of communist China, the top 1% own just about as much as they do in the United States of America.
Yes, but I'll have to draw you to be
Of course you have to draw my attention here. So the point I'm trying to make is the following. There's a lot of changes that are going on. These changes are driven by the demographics, which forces, number one, a shortage of labor and skill, which empowers the young generation to take risk. It forces the dinosaurs, right, to actually change the single most important thing, which is the incentive structure, the promotion system, the career path within a corporation, moving towards a meritocracy. And last but not least, when you look at the overall economic goals here, which is freedom from government intervention, fair distribution of wealth, making most of all resources, stability and predictability, and yes, thank you, there is economic growth. By the way, it's interesting, right? Anthony always calls me and says, "Oh, but Germany is surpassing Japan as the number 3 economy." Trust me, if you want to see a depressed country where people have lost their patience, go to Germany. Nobody's happy about being number 3. And by the way, Germany was the only country of the G7 last year that had negative GDP growth. Anyway, Japan, model of capitalism that works. Thank you.
Thank you.
Could I take 3 minutes to respond?
Of course.
Well,
Sure.
No, wait a minute, please. I'm anxious to let the audience generally in. They've been online for an hour, so by all means, I'll give you opportunity to respond. But unless it's very brief. But the problem is, if you respond, George, please.
Very brief.
Yeah,
Okay,
very brief.
so first I thought hell had frozen over because Jesper and I were agreeing, but luckily he came through. The big disagreement between the two of us is where does the locus of progress in Japan come from? Jesper thinks it's the big, giant listed companies. He's also far more interested in the return to shareholders than, in fact, the declining real wages of the population, but that's his interest.
Okay.
In my view, the locus of reform will be a generation of new companies. And one thing, in 60 seconds, it's very easy to raise your share price. Share is priced as a function of earnings per share. The hard way to increase your share price is to double your earnings. The easy way is to have the number of shares by buying them back. So these cash-rich companies, instead of paying their workers more so they can buy the products and improve their living standard, are buying back their own shares. So that is not a sign of health. That's a sign of a dysfunctional big corporate sector.
We'll return to that later. Sorry, let's first, if there are any questions from the audience in the present, but please step up. George.
Thank you.
Mr. Koll, how investors
Microphone.
react to your presentations?
Please
Japanese
identify
investors,
yourself. Identify
not on individual investors.
George, would
and
you
foreign
identify
investors.
yourself, please, for the
I'm
record?
working for Swiss Television in
Thank
Tokyo.
you.
How do investors react to your presentations these days? Are there,
So it's super.
are there still momentum investors like at the beginning of Abenomics, or is it changing?
No, look, it's very, very interesting, right? And you know, the interesting thing, two comments, right? The first one is that in the global community, right, you now have an entire new generation of investors who've never looked at Japan because you didn't have to. You know, I mean, all you need to do was buy the S&P, you know, and you were fine. You didn't have to, you know, my God, why bother with Japan? It's complicated, right? The sushi is good, but it's complicated. Now, you know, obviously, you know, performance builds on performance, right? That's just normal, right? Fear of missing out, fear of underperformance is very real. But, you know, sort of visiting corporations, right? And not listening to an analyst, right? You know, but actually listening to the corporate leaders, right? You do get a sense that now these people know to speak capitalism. They now do know what ROE is. They now do know what a share buyback strategy is. They now do know what weighted cost of capital is, which 5-6 years ago, you know, quite frankly, wasn't the case, you know, for a surprisingly large amount of CEOs. So number one, there's a new generation of global investors, right, who are engaging with Japan because you actually do see that the focus on capital efficiency, right, and on investing for the future is actually very real, right? So that's the one thing. The second thing, which is very interesting, right? I spent with the Monex group, you know, a fair bit of time talking and engaging with Japanese retail investors, right? Very, very interesting. Of the retail investors, right, you get a positive response, right? But this positive response is very much weighted by generation, in the sense of that, you know, the younger generation from 25 to 40, right, is much, much more engaged, fully understanding that if you buy Mitsubishi Bank, you get a dividend yield of 4%, while if you put your money on deposit, you get absolutely nothing. So it's quite interesting that you have that. So we did some surveys, right? And you know, the survey is very simple. I mean, do you at the end of last year, do you think in 2024, right, the Nikkei will surpass kind of a new absolute high, right? And it was very interesting. Of the cohort 25 to 40, right, 80% thought so. Of the cohort, you know, 50 and above, right, only about 50% thought so. Then we did a survey amongst the companies, that we engage with, right? So a sample of about 80 listed companies asking the CEO, do you think it will reach a new high, right? And it was about 35% who thought that it would reach a new high, right? Then we did another survey with some of the institutional professional investors, right? Do you think the Nikkei will climb to a new high, right? And only 15% said that they would do this. So it's quite interesting, right, in terms of specific asset owners, which is what you talk about. The legacy of the domestic institutional assets being very lazy, refusing to engage in their domestic market, right? That's actually why the current momentum is far from over, because you've got big institutional Japan money, right, still, not having moved to allocate to Japan.
Okay. Do we have any more questions? Yes, the gentleman at the back. Please come to the microphone. Identify yourself, please.
Hello. Yeah, my name is Peter Morris. I'm a lawyer and also I write for Asia Times about Myanmar. I'm a little confused, Jesper, because you said the Anglo-American model is capital maximization, and that's bad, but then Japan is really good at operational efficiency now, and so I'm not an economist, so maybe you could explain that to me. And then another thing is, are there any trends that you notice and why operational efficiency has improved in Japan? I'm guessing it's cutting costs, because it's definitely not raising, or maybe it's lowering wages. I don't know, but what kind of cost did they? And then related to that, do you think what kind of challenges do you think because this is only my fourth time listening to Richard's talk, okay? And so in one of those times, I remember him saying it's Japanese companies. They don't. It's not productive when they incorporate new technology. So do you think that there's a lot of opportunity for Japan to further increase operational efficiency using new technology or software? And if not, what is holding them back? What is holding them back?
It's very interesting.
Jesper first, and then Richard. Yeah.
Right. In terms of operational efficiency, right, it's actually very split between the tradable goods, the manufacturing sector, and the non-manufacturing sector, right? Overarching, the theme is, the fact that, Japan destroyed its labor market in 1995 when Prime Minister Hashimoto engaged in large labor reform that allowed part-time and contract employment across all industries. And so as a result of that, the non-full-time employees, right, went from basically around 18% of the workforce to currently about 40% of the workforce, right? And a non-full-time employee in Japan, basically earns, give or take, 35% less, right, than a full-time employee. So that was the bulk of the cost saving that actually happened, that an entire generation of Japanese who were hired from 1996 onwards, right, in the aggregate, right, in macroeconomic terms, right, the only net hiring was part-time and contract, was not full-time, and as a result of that, companies save costs. And as a result of that, of course, you don't have purchasing power, you don't have income, right? The purchasing power of the people actually went down. The second point, right, which is very, very interesting, if you look at the use of technology, as it's called, right? With the industrial sector, you don't have to worry. They, for all intents and purposes, the factory efficiency and productivity, is actually very, very high. The problem is the service sector, right? And the service sector, because the cost of labor was depressed by these changes in the labor market that allowed me to hire 30% cheaper, right? As a result of that, the service sector overhired and underinvested in new technology, right? Now, and my whole point is, by the way, my whole point is that the demographic shortage, the shortage of skill, the shortage of labor, now forces everybody to rethink, right, how, all the factors of production, capital, investment, as well as, labor is actually being used. You see what I'm saying? It's not, I'm agnostic on whether the change comes like Richard. I'm a big investor in venture capital, in angel investment here in Japan, right? I am, the fact that you do have the entrepreneurship here, the fact that the dinosaurs are actually forced to change, but the driver of the whole thing, it's that interaction and that market that actually makes me very, very optimistic, right, for the overall returns that we get here in Japan.
Okay, Richard, I'm sure you want to
Yeah,
add something on that.
making profits by cutting wages is not operational efficiency. Jesper had said that the US model of making lots of profits off of cheap labor is passé, but that's exactly what Japan has done, which it didn't used to do. Wages used to keep up with growth, with GDP. Korea does now. Korea actually pays its workers more than Japan does. And Korea has surpassed Japan now for that reason in per capita, real per capita GDP. Look, the problem with the technology, and this is why I'm talking about the big companies are stuck in the analog era. What they do is they take digital technology and they use it to automate tasks that they were already performing. So it's a cost-cutting mechanism. But the real thing about digital technology is that you could do things you could never do before. You have big data. You can look at customer buying patterns. You now have sensors that can tell when a parcel delivery truck is going to break down, so you bring it back to the shop rather than letting it break down the road, and that saves huge amounts of cost. You put together people who want to switch jobs with companies that need new people, and you use the digital technology to modernize and make more efficient Japan's most backward industries by sector. The government and business leaders think that corporate governance and some exotic technology, nanotechnology and superconductivity and lasers, and now AI is going to solve the problem. No, it's taking the combination of modern technology and competition, including globalization, bringing in foreign experts who are actually very used to how do you use technology properly to re-engineer the corporation, putting all those things together and taking sectors that are backwards by world standards. Manufacturing is, the last time I looked, about 70% of US GDP per output, behind Europe. Japanese manufacturing is a lot better than services, but it's not good. Taking these backward sectors and lifting up them to world benchmark levels, that is where it's going to provide the growth. And who will do it? It will not be the big companies that are talk good, it's all tatamai, but stuck in the analog mindset. It's going to be new companies, either because they replace some of the big elephants or dinosaurs, whatever you want, animal you choose, or they kick them out of the market, as they do in other countries. That's where the growth is going to come from. So, as I said, the difference between Jesper and myself is where we both see Japan changing, and we're both optimistic. He thinks they're already doing it. I think they're yet to do it. And I think who's going to do it is very different.
Let me give you one counterexample. 2 weeks ago, KDDI bought Lawson. This is Jeff Bezos's wet dream. And watch out what's going to come there. And I mean, if you actually look at productivity measures on a company-by-company basis, the digitalization is actually very progressed within companies. The difference is that it doesn't get out. Right? So K that's A doesn't talk to K that's B. They don't share data. They don't access data. That's the big difference that you actually have here. Right? So anyway.
I can see a hand has been raised for a long time. I think Alan Douglas Smith. If you wish to ask a question, could you unmute your microphone and ask it, please? Alan Douglas Smith, are you there? You've had your hand raised. No? All right. Well, okay. In that case, any more questions from the floor? Or yes, this. Well, I think you raised your hand first. Please, yes, you go ahead. Identify yourself, please.
My name is Tetsushi Sonobe. I'm running a think tank called the ADBI, which is a Tokyo-based think tank of Asian Development Bank, Multilateral Development Bank.
I'm sorry, I didn't recognize you.
I'm an economist, and as an economist, I completely agree with your argument, including your responses to question. But the Japanese economy is not operating in isolation from the rest of the
Sorry, could you speak a little bit closer to the microphone, please? Just a little bit closer.
Yeah, so it's not in isolation from the rest of the world. So, and then the geographical, geopolitical tensions, risks, it's increasing, right, toward the U.S. presidential election, and then. As you mentioned, the Japanese political world is very weak, and then almost not non-functioning. And then the bureaucracy is now deteriorating rapidly. So young officers leave the ministries, and then the graduates from the top universities in Japan do not want to join the ministries. So MOFA or METI or MOFA do not function at all. And then how can Japan respond to the increasing geopolitical tension? And then maybe those former government officials who are now starting the businesses may lead the Japanese the kind of economic diplomacy, but they are not yet organized at all. But the businessman organization, political organization, usually kind of not very nice things usually. But now the Japan is now starting to form such things. So if there is any good model or something, then we may have very nice new type of business organization. Do you have any insight or advice?
Sonobe-san, let me first apologize. I didn't recognize you when you came in. You're wearing glasses. Sonobe Tetsushi-san is, of course, the Dean of the Asian Development Bank Institute here in Tokyo. I'm very happy to welcome you among the audience. So, Jesper first, and then Richard.
Oh, Richard, I was hoping you were going to go first.
All right, well, Richard, then. Richard, go you.
Well, I'm not going to get into geopolitics, but although just to express my incredible disappointment at the Buy America protectionism of the Biden administration, I really thought it would be better. But electoral-politics, anyway. But on the economic side, look, France 2 decades ago was considered very, very anti-entrepreneurial. In fact, there was a story that George W. Bush said Japan is so anti-entrepreneurial, they don't even have a word for entrepreneur in their language. Actually, he didn't say it, but it was believable. But they developed an angel fund tax. Venture capital companies, they finance firms that are going to become giants on the stock market. Angels fund a company that may go from 50 people to 200 or 500. They provide those 50,000 that I mentioned. So they created an angel fund that middle-class people could get a big tax break for investing in them, in funds, like a mutual fund, but it's an angel fund that the government would certify. As a result, they now have 40,000 new startups that were worth about $10 billion in 2010. They're now worth about $300 billion. They've got 26 unicorns. A lot of them are in deep tech, these startups, right? So France is still France. The waiters will still treat you badly at a restaurant, right? It hasn't become America. Japan can just be Japan, do the same thing. What happened was when Kishida talked about new form of capitalism, and there was a proposal for an angel tax in Japan, they created something that was just awful, which is you had to invest not in a fund, but an individual company. Well, most companies fail. Nobody in his right mind would invest as an angel, who's not an expert there. What happens is you do something and the finance ministry, tax bureau says, no, we cannot do it. But this is going to help the economy. No, because if we allow this tax cut, then everybody else is going to have a tax cut. The only tax cut we allow was they cut the corporate tax for the big giant companies from, I think it was close to 50% was the top rate, now 30%. I don't remember something along that line, because METI wanted it. When I met with METI people with Kishida's program, what are you going to do to push through some of these measures? They said, well, you know what? Kishida said he may want to increase the corporate taxes a little bit to help pay for defense spending. And they said, our main priority in METI is to prevent a rise in corporate taxes. Not to create new entrepreneurs, not to do these things, but to prevent a rise in corporate taxes, even though these corporations don't spend the money. So you've got people who were tied down in these institutions. And you've got lots of people who are really very dedicated professionals who try to manipulate within the system to get whatever concessions they can. And these people are terrific. So what happens is the whole is so much less than the sum of the parts. The experts know what to do, smart bureaucrats know what to do, but these institutions have their way of operating and they just will not change. And a tiny little tweak in that tax break could have made a huge difference. Japan could have been as successful as France has been. It's not doing it.
Jesper, would you like to make a comment?
So you raise a very, very important point, and I will tell you a personal anecdote. When I turned Japan optimist, I don't know, 1999, 2000, something like that, right? My mentor, God bless him, said, "You're right. Everybody's so bearish, you know, so somebody's got to speak up, right?" So fine. But he said, "But Jesper, you're going to have to reconsider if and when we're going to raise defense spending." And the reason is very simple. This thing here, right? The Apple iPhone or the iPhone, the mobile phone, right? How much of the entire value creation, how much of that is Apple? Do you know? It's 3%. More than 95% is the American industrial innovation defense complex, right? Because, you know, the internet, which is what this thing works on, basically, right? You know, it wasn't a bunch of nice scientists at Stanford wanting to talk to their girlfriends at Berkeley, right? It was scaled up, and this is the important point, right? For entrepreneurship to succeed, I mean, there's 1,000 lights, but the real issue is scale. How do I get scale? And that's what America does, because America has excellent, best-in-class governance delineating intellectual property, right? As well as delineating dual-use technology, what is a national secret, what is, you know, for dual use. And in Japan, this doesn't work. Let me give you one specific statistics. If you look at the US defense budget, 15% goes to research and development. Do you know what it is in Japan? 0.7%. And not a single university professor will accept a grant, you know, from the Japanese Defense Department. I'm exaggerating. That's obviously not true, not a single one, right? But this issue, and you remember the story about how a professor invented the blue LED. They're still having lawsuits about who owns the property, right? The intellectual property. So it's quite interesting. The single biggest challenge that you face in this geostrategic, you know, new reality, where whether we like it or not, right, you're going to have to pay more. You're going to have to allocate more of your resources towards defense. The industrial policy challenge is to ensure that, yes, you're not just buying guns, you're not just buying US Patriot missiles, but you actually have in place an innovation complex, a deep research innovation complex that allows for Hitachi or for some startup to become a better company. And Japan currently does not have that. It's the single biggest challenge that you face, given, since you specifically ask about these geostrategic realities, you know, that Japan is facing.
Does that answer your question, Sonabe-san? Good. Okay. If there are any questions online, please, from the audience on Zoom, please raise the hand so that I can see. But if not, yes, Kurt, please. Please, go ahead. Kurt, yes. Identify yourself and brief question, please, Kurt.
Yeah, my name is Kurt Sieber. I have followed Japan now since 1960. So, fortunately, I'm with the next generation now, and behind that I have 9 grandchildren. So I'm quite happy about that. But I'm asking you a very simple question. How do you view the new governor of the Bank of Japan, which is, well, it's very, very easy and very difficult. Thank you.
Yeah, for 30 seconds, and I'm very biased. He was my professor. You know, I think he's doing a brilliant job, right? And it's very, very interesting, right? The challenge that you have is the normalization of Japanese fixed income markets, right? And in the first 9 months, what he did very successfully is to reliquify the government bond market. Because you used to have the government bond market, basically 95% of the liquidity came from the Bank of Japan. The Bank of Japan was the only buyer, so the private sector was totally crowded out. All my friends in the fixed income markets loved it because they could play golf, right? They didn't have to do anything. But, you know, with last year's actions, right, where basically you removed the hard cap on the 10-year bond yield, and you now have a reference rate of 1%, right? You actually find that now about 85–90% of the liquidity is backed by the private sector, right? So the back end of the bond market, the 10-year part of the bond market, has actually been, I'm going to say, use the word privatized, right, from what used to be the Bank of Japan control. For this year, for 2024, we are going to see the normalization of the front end of the Japanese curve, right? And, you know, for this, actually, the accord with the Kishida administration, you know, is very important because I'm getting a tax cut. That creates room for the Bank of Japan to actually normalize interest rates. So I believe that over the next 2 or 3 months, we're going to see the first increase in short-term interest rates. And whether it's to 10 basis points or whether it's to 15 basis points, be my guest, it doesn't really matter, right? But this challenge, right, of reprivatizing Japanese fixed income market, the bond market has already been successful. Now it's going to be the front end, the short end of the money market. And for all intents and purposes, I think they're doing a brilliant job. I'm not allowed to say this as a private sector guy, right?
Yeah, just very quickly. On the tax cut, it may happen, it may not happen, and who gets the cut, we'll see.
It's in the
Look,
budget.
the BOJ, they're fiddling around with some of the instruments they used, whether they keep the zero thing overnight at slightly negative, and the sort of the yield curve control and these techniques. But at the end of the day, the supply-demand, there we go again, I got another one in, supply-demand situation of who is borrowing money to do what with determines interest rates and who supplies the money. The corporations are so cash rich that they don't need to borrow anymore, all right? And which also means the financial markets have less control over what corporations do to force them to do the right thing, right? So what will happen is, even if the Ueda makes these tweaks, and I also think he's doing a good job, but it's something that we two agree on, interest rates are not going to rise all that much. And they'll rise somewhat, but there is no market pressure on interest rates to rise. And so I think we're still, and that is a reflection of the fact that corporations are taking in all this money, but not investing in. Every year, the amount that corporations take in cash flow is more than what they invest, to the tune of 4 or 5 or even 6% of GDP. And that's like a farmer who leaves half his fields fallow for year after year after year after year. And share buybacks do not get it back into the economy. Paying workers higher wages get it back. Other things get it back. So that's my take.
That's an interesting point. Okay, I'd like to have a question and come back to the basic theme of this meeting, which is, you know, there's a dual impression of Japan. On the one hand, it seems to have lots of reform going on, not least in the financial sector. Corporate executives are becoming more capitalist-minded, it seems. But when is this going to show through in Japan's growth rate? I mean, Jesper appeared to downplay this, but the fact is that the growth rate is going to fall this year from 1.9% to 1%, which is pretty modest. So
It's not a fact, that's an IMF forecast.
when do we see the positive impact of these reforms showing through? Richard first, and then Jesper.
Yeah, first of all, I do not agree that the leaders of the top corporations are becoming more capitalistic. The fact that they buy back their shares is not capitalism. It's financial manipulation for share price. I think even if you did everything right, it's going to take several years for this to follow through in the economy. It takes time to build companies. It takes time to build companies that force changes in the big corporations or replaces them. So you're not going to have, even if they did everything right, which they're not going to do, it's going to take years for this to show up. But the fact, if people can see it coming, there are certain things they could do for wages immediately, which would make a huge difference. Kishida refuses to do them. That could be a big reform with quick payoff. But in terms of the productivity side, that will take years to show up. And basically what you have in Japan is you have alternating 5 years of zero growth and then 5 years of 1.5% to 2%, and another 5 years. It's been this way since the 1990s, as I said, for the last 6 years. So I don't see, my disagreement is I don't see the reforms in the big corporate sector happening that Jesper sees, and we don't see, in terms of productivity of these corporations, we don't see a change. The change we need to see, as I said, is a new generation of new companies. We're seeing it, but to get big enough to really reach critical mass that can change the economy, that's going to take years. But starting now will create an optimism and a willingness to invest in the change. So those are the results that we'll see. But in terms of GDP growth, it's going to take a while. And wages, anyway. Go ahead.
Thank you, Jesper. I'm sure you want
it's not, GDP is the wrong measure. It's not going to show up in GDP. It's not my fault. It's not your fault that there are no babies, right? And that as a result of that,
there is per capita GDP.
No, but you can pretend to do all these wonderful measures, but it's not. About GDP. In fact, there's a huge challenge. Sorry, since, I'm the optimist, right? Let me tell you what I think is in the here and now is a huge challenge, which is the reality of China, right? Actually, in the tradable goods sector, particularly in capital goods sector, taking massive amounts of market share from Japanese companies, right? People associate, China is weak, therefore it's not competitive. It's quite the opposite. China is weak, therefore it's got excess capacity, and therefore it's taking market share. I'm very worried, the fact that, we've got companies like Fanuc, like Murata Seisakusho, who are the best in class, or were always the best in class. You look at their international orders, right? They are plunging by 20, 30, 40%. And that's because orders to, I guess it's called the Global South now, or BRICS++, or whatever it's called, right? But, the anti-American alliance, which is where high profit margins exist. In the Middle East, that's where plants are being built. In South America, that's where plants are being built. Even in India, that's where plants are being built. They're no longer being supplied by Japanese because Chinese manufacturers are now there, and they're building perfectly fine robotic system. They're building perfectly fine components, right? So to your point, right, this is about improving, the return on capital, right? And whether it's through new companies coming in, whether it's through old companies changing, be my guest, it's the interplay, the market, between those two things, right? Being greater than income, right? I mean, you don't have to be a Marxist or Mr. Piketty to figure out that that's possible, and that's exactly what Japan is doing. So in terms of GDP, what do the BOJ thinks the potential growth rate of Japan is about 0.8%, right? So I'm the bullish guy, and I think it's 1.1%. Be my guest. That's not the point. The point is, will Japan have a fully functioning, fully funded pension system? The answer is yes. Will Japan have an environment where whether you're an old corporation, you can actually change, or whether you're a young corporation and you want to cut your teeth, right? You actually see that that's happening. And by the way, for 30 seconds, right? I'm very bullish on the whole entrepreneurship been for decades, right? Kishida asked me once, what should we do to foster a greater entrepreneurial environment? And my answer was, get out of the way. Because these programs that the Japanese government is putting together now are ridiculous. A friend of mine calls it startup cosplay, where Richard, you and I are in the wrong business. We should set up a company, and then we get a government grant, and we get flown business class to Silicon Valley for 2 weeks, staying in the Four Seasons Hotel, and we get to meet some flunky in the American VC world. And that's paid for by you and my taxes. I mean, the whole point about entrepreneurship is not support. The whole point about entrepreneurship is to actually be feisty And by the way, let's not forget that 2 of the most successful entrepreneurs in the world, come from Japan. That's Mr. Yanai from fast retailing Uniqlo, a deviously nasty and nasty business, as well as, of course, yes, there's Masayoshi Son.
Okay, take
Sure.
1 minute.
2 minutes, yeah.
Okay, 2 minutes, thank you. All right, the point of an economy is to raise the living standard of the population. Corporate profits are a means to an end. Capitalism is fantastic when it's run well at doing it. It's an anthropological leap in living standards in China, now in India, and all over the place, right? But there's a declining living standard in Japan. They have cut Social Security per senior by 20% since 1996. What is the measure you want to use of Japan reform working? The most basic measure is the living standard of the population, part of which is captured in GDP, it's captured in wages, it's captured in overall disposable income, right? That's the measure we want to look at. That has been either stagnant or on the decline for large sectors of the population. Widows shoplifting, going to jail for shoplifting. They get out and they shoplift again so they can be put back in jail where they're going to have a bed and food and company. It's a small number, but it's a huge bit changing trend. That's the measure, the living standard of the population, part of which is captured in GDP. So the question is what's happened so far increasing the living standard of the population? I don't care about a company profits except insofar as that when companies can make profits by doing the things that make an economy perform better and raise the living standard of the population, those are the kind of profits I'm interested in.
Okay, George, yes, okay, quickly then, very quickly, please, because we're over time. Microphone.
Mr. Koll, how companies like Murata or Fanuc can respond to the challenges of Chinese companies?
Look, this is the gazillion-dollar question. And by the way, Swiss companies and German, manufacturers, machine tool machinery, as you know, this is real. This is a real problem. I don't have an answer because I need some better technology now. Really, I mean, good luck, right? That doesn't happen overnight, right? This is the analog world that actually makes stuff, not some AI world, right? So the second thing is that I need to find a new market. Where's my new market? Where's my new growth driver? The growth driver of the world economy over the last 20 years was, thank you, the People's Republic of China. We are excluding ourselves from the People's Republic of China for all sorts of geostrategic this, that, or the other, right? Maybe right, maybe not. I'm not a defense guy, right? But so where's my new market? Because you know what? Indonesia is perfectly happy to build their factories with Chinese components, right? So this is the real conundrum that you have, and this, from an economist perspective, right? The U.S. led geostrategic, a Cold War. Wow, really? Do you know how much excess capacity, how much deflationary forces that actually unleashes? Okay. And your allies, right? The people who actually make the stuff, right, are suffering a great deal from that. And of course, the natural response is something that goes anti-national GDP because the deindustrialization, by the great American industrial policy, where now your local content requirement, if I build a factory in the United States, right, my local content requirement has gone up dramatically, that as a result of that, yeah, I'm creating jobs in Arkansas, right, but I'm not creating jobs in Nagoya.
Okay. Well, you've led us into the subject of the next deep dive, but unfortunately that's going to be for another day. Okay, well, a very interesting discussion. Thank you both very much. I think I declare it a draw as far as who is right.
Oh, let's take a vote.
We'll take a vote, all right, maybe. Or maybe we don't have time. So, again, thank you to the panelists. And that concludes today's event. Thank you very much.
Thank you.
Please join me in thanking the panelists.